Ladies and gentlemen, welcome to the Fintech Frenzy. Holy, okay, we saw what KBW had said about SoFi stock, but I don't think many would think that this would have been the response to this sell side analyst. Okay, what we saw today was the stock get brought down nearly 14%, all the way down to $8.30 on the idea that interest rates getting cut is bad for SoFi's business. Okay, so Tevis put it pretty well on Twitter. He said, analysts, a couple months ago, if interest rates stay high, SoFi, it's bad for SoFi's business. If interest rates get cut now, okay, well, that is bad for SoFi's business. Reminds me of whenever we were not a bank before, and then whenever we actually became a bank. Both sides of it were bad for business. Similarly with this conversation as well. I think that the truth is that the stock is becoming more and more diversified, okay? And that there's so many different aspects of SoFi's business that it looked like the short report that they were talking about, not short report, sorry, it's the sell side report, was just, hey, these aspects of the business are going to be extremely hurt as rates start to come down. He's talking about personal loans and checking accounts, okay, which is, necessarily true. What was not talked about in this report is all of the other aspects of SoFi's business that is going to do extremely fine as rates get cut. Talk about SoFi Invest, right? SoFi Invest was doing amazingly before rates were getting cut, before Q4 of 2021 even, whenever stocks were doing very well. And then as rates started to go higher, the move between stock market investing and then putting money into fixed income products like bonds and treasuries and these sorts of things became much more appropriate to sort of get a little bit more risk off investing. Okay, whenever that happened, retail investors like you and I, well, not like ourselves maybe, but definitely not for the people that are watching live streams about stocks, but a lot of the average Joes were saying, okay, well, stocks don't work, I'll take my money out of here and not invest for the long term. This happens all the time. You see it in Robinhood's numbers, you see it in SoFi's numbers, and all the brokerages, right? People want to invest when things are green, not when things are red, contrary to what Warren Buffett says. But if things start to turn around, if rates start to get cut, then this means that potentially, risk on investing might be more worth the approach because, well, people might not be getting the 5.5% that they're so used to in treasuries, right? They might have to stick to something potentially 100 basis points or 200 basis points in the future, even lower. And then at that point, things that might hold up faster growth rates in stock market investing, like the S&P 500, might look more favorable, considering that the risk might be worth the reward versus the alternative. You see this extremely commonly whenever looking at, zero interest rate environments. Whenever that happened during, COVID and everything, stock markets boomed. Because the idea of putting your money into fixed income products to offer you near 0% it just wasn't worth the squeeze, right? CDs and GICs, if you're here in Canada, just weren't doing so well. So as interest rates were getting cut, stock market investing was going up. This is another thing that I wanted to pivot on. So first off, products that were not brought up in this sell side report just simply weren't talked about. Student loans will greatly benefit from rate cuts. Home loans will benefit. SoFi Invest will benefit. The technology platform, like no one is talking about the technology platform on this side, how well it benefits in lower rate environments. As rates start to get lower, it allows people, lower costs of capital. And so then they can invest greatly into the growth of their businesses, right? As interest rates start to go up and then companies have to be self-funding because the cost of capital is so high, that it's more important to hit profitability than it is to hit a high number of growth rates in certain aspects of the business. Whereas oppositely, what was benefited in COVID and zero rate interest rate environments versus previously was growth at all costs, market share capture, cost of capital is so low, it's worth to invest for the future. So That also benefited Galileo greatly because there was so many new fintech companies and growth companies that were starting to come out of the woodworks trying to capture market share in their own respective environments, right? This kind of completely cut off for SoFi. Once VC money had completely drained out of fintech, once interest rates started to go up because money was shifting away from growth style investing, going to fixed income, that also affected the new account openings that Galileo was achieving. So even Galileo had to pivot their business model and say, okay, we're going to go from, the fintech companies that we're usually going with, but now that startups are coming to a near halt, we're going to go over to more of traditional financial companies. If that tide starts to turn again, you're going to see those fintechs start to come back, a lot of those new innovations, and they're going to look for a modern card program solution. So that will also benefit the tech platform as well. That just simply wasn't talked about. Sure, there are going to be some things in terms of checking accounts and personal loans. I was going to actually credit cards is another one. Why is no one talking about credit cards? Credit cards are going to benefit greatly as interest rates come down. Yes, there's still going to be that aspect of the actual, the loans and everything will also come down. Our APRs will come down, our coupons for those credit cards, but the interest rate or the interchange stays the same. So it's actually becomes more favorable to have spending products like that in the field. I was going to name something about the switch in interest rates. Anyway, let's move on. So the two aspects that they were talking about that wasn't going to do so great, and data-driven investing, Chris Hager had some great things to say about this, because obviously he said that he got the report from one of his audience members, and they said it was really falling into two camps. They estimated that there was going to be a lower amount of originations leading to lower growth on the lending side. And they even pointed to management saying that themselves. And then they also said that the fair value of their newly originated loans would be lower, as they'll have to lower APRs to stay competitive with the lowering of credit card rates and all of these things. Okay, like data-driven investing also pointed out, and it's absolutely clear, what management said was that they expect lower originations because interest rates stay higher for longer. Okay, this is the same thing that we talked about yesterday. If, for example, SoFi says they are only going to achieve 50% lending growth, and then the other 50% of revenue is in technology and financial services, that's predicated on the idea that interest rates stay higher for longer. Now, we'll talk about what also happened today, which is actually potential bad news in the market. It's not this freaking KBW report that, in my opinion, didn't hold a lot of weight. But both things can't be true. You can't say that the fair value of SoFi's loans are going to go down because they're cutting rates, but also because they're cutting rates or because interest rates are staying higher that we're not going to see originations. Remember, the actual loan book that we have today, as rates get cut, if we have the same fixed rate coupon rate on those loans, those will be valued higher in the secondary marketplace because newer products will start to get priced lower and lower as interest rates are going down. So yes, we can sell off a bunch of loans and take on lower coupon rate loans, but then that also might come with lower cost of capital, right? As those things are coming down, that would also bring down our variable costs on our warehouse facilities and potentially even pushing those onto SoFi money accounts. Now, that was one of the things that they talked about. It might not be as easy or as fast for them to bring down those, deposit costs of capital. But I don't actually think that would be too much of a big problem. This is sort of the problem, is that they point out these issues, but that's the thing about having a diversified business. You can't just look at the aspects that are going to do poorly without looking at all the aspects that are going to do greatly during the shifts in macro environments. Just doesn't make any sense to only look at one side and not the other. I felt like that was what they were doing here, and it just seemed a little bit weird. One of the things I also wanted to talk about in that instance, what was it? Why am I being so forgetful right now? I don't know. I don't even remember. Maybe someone in the chat can tell me what I was. Frank is back. Tanner reminds me of one of those overhead speakers saying rubbish while the sink. I think he means the ship is sinking. Frank, the last time you were here, I think the stock was like $6. Now it's $8.30. It's had a massive run up, and then you come back. You're like one of those sharks in the water that smells blood. The second that a bad day happens and the stock, drops 14% off this massive run, it's still great. I'm not even adding, at these prices because it's still far beyond, my average cost right now. So, yeah. But the truth is, guys, you can't sort of have both sides of the camp. There's a bunch of people whenever the stock was running up where they're like, oh my gosh, is it too late to buy all these things? And then as we get one bad report from a single analyst, there's also other analysts that have better, better average returns than this Michael from KBW that are saying it's a $14 stock. But because he put his price target from $7.50 to $6.50, it's a bloodbath, right? I don't want to scream market manipulation because I find those things very hard to believe. But in the hundreds of millions of dollars that were placed short on this company after this large run, it does seem a little bit too good to be true that they saw such a strong pullback on no new information at all. We all knew that rates were cutting. We all know how the banking system works. The institutional investors that are investing in SoFi understand what happens to the loans as interest rates run up or down. Seems like a bunch of fluff to me, and I cannot believe that it runs so hard on this one report because it's silly. You were about to talk about what you considered to be a greater concern in the market right now. Oh, so I don't know about if this is a greater concern in the market, but I do think it's funny to place a lower price target, even if the company will do worse fundamentally. That's also what I was going to talk about. I was going to talk about their revenue expectations, but I'll talk about that in a second. Even if you were to suspect that SoFi now is going to do worse fundamentally than they would if the stock was to stay at higher interest rate environments, well, if there is a massive flood from fixed income products over to stock markets to get that sort of risk on products, then that artificially, well, not artificially, but that will bring up the multiples on stocks like SoFi, speculative stocks, growth stocks, all of these things will just rise because there's more capital in the markets. So not only do I believe that fundamentally it will improve because things like the technology platform will do better and all these stuff, but I also think just artificially multiples on these companies will go up. So I think that this is the wrong bet to make, thinking that the stock is going to crash over the next 12 months if there's so much new money coming back into the stock market. I just think it'll take the lows, or it'll raise the lows to much, higher prospects, even if the fundamentals get slightly worse than expectations. Hasn't been true in SoFi's history. Well, also seeing way worse, headwinds than this. This is fundamentally, even heard from SoFi's management, this is a tailwind. This is great news. Macro environments getting cut is great for SoFi. I'm going to listen to them. I'm also going to listen or give them some execution credit on the idea that if they do need to pivot their business model a little bit, right, going away from personal loans, which might be sort of less in demand. I still don't even think that's true. There's so much credit card debt out there, 1.3 trillion, that even as rates start to come down, they're not going to come down at nearly a fast enough pace to make it a sizable difference in personal loans throughout the next 12 months, which is what Michael is saying. I believe, if, for example, SoFi can have an entire business model that was taken away from them, student loans, and they pivoted away from student loans into personal loans and checking accounts and make this entirely new financial services line that has done phenomenally, that is now contribution profitable. that the idea that they can't pivot away from personal loan lending and get into other lending sources and financial services and the tech platform back in during a time of a macro change, I don't think we're giving the same management that did that the execution credit to do it now, right? It's the one thing that I always point out about what bears will never be able to grasp is the idea that management can make a change. They're saying if this company continues to run its course the way that they've been running, things will get materially worse. Well, things don't have to run the way that they've been running either. So I disagree. All of Fintech got hit today. Yes. Well, there is an aspect of real information that did come out that wasn't good, right? If the Federal Reserve is saying, hey, you know what, there still actually might be aspects that rates need to stay higher for longer. If they go from, instead of a cut in March to a cut in May, for example, well, that is materially worse for SoFi, right? That might lead us, I still think that we'll be able to sell our loans as long as they know that we don't have higher, increasing interest rates, because then that would actually decrease, the coupon rates of not our coupon rates, but the fair value of our loans in secondary markets. People will not want to buy our loans if they know that we're going to be selling loans later that have higher interest rates. So, yeah, I just think that I don't know. I don't know. I feel like I am a little bit just repeating myself here, but cuts to SoFi are great. Having interest rates be stuck at the very top is great for SoFi. Both can be true. But isn't higher for longer, wouldn't that be good according to the latest hit piece? I mean, according to that hit piece, yeah, sure. But I actually don't think it would. I think that, in that case, they might have a slowing of originations. Yeah. One of the things that they actually did say, which I do believe in, and it's a downside, but I don't think it's sizable enough, was that repayment was going to come back at faster rates. If, for example, interest rates start getting cut, that people will say, oh, you know what? I'm going to pay off my loans faster. I'm going to get a new loan, pay it off, deconsolidate somewhere else at lower rates, something like this. That could, it doesn't hurt SoFi. We're getting our principal back without the interest, or at least the future interest that we would have gotten. And then whenever we do need to lend that money out, it would be at lower interest rates. But that as interest rates come down, it comes at, lower costs of capital, lower default rates, these sorts of things. So I don't think that these expectations are nearly going to be true. I think what they said was they believe $2.3 billion in revenue by 2024. Okay, so what is that? From my projections for the end, or not even my projections, SoFi's projections, over $2.05 billion or something like that in revenue. So you're talking about a near 15% increase in revenue. You're so far off of SoFi or management's conclusions for growth in their stock, talking about, holding up 30 or 25 to 30% growth for the foreseeable future, let alone just over the next 12 months. I think that's an extreme discount to what management is seeing with numbers that we don't have. We don't know what's in the pipeline. I wouldn't bet against them, at least not that drastically. That's ridiculous. Charles says something interesting here. Stocks under $10 are usually manipulated heavily. Could be for sure. I think that 2024 is not the year that I would be betting against SoFi, because as they start to bring out net income numbers, if they get 4 straight quarters of profitability, This will lead more funds to get into the stock. It'll lead, banking is one of those things that it actually becomes so like not speculative and not risky because the products are so diversified, and obviously the less amount of users, the more concentrated you'll be on them. But as we're getting this wider and wider base, it makes it very safe for SoFi over the long term. Yes, there are still large risks in defaults, but you're not going to find them with interest rates coming down. I would say all these users, as long as NPS scores stay on, people continue to spend through the platform, direct deposit, and do all those things, that they will hit their gap, net income positives for 4 straight quarters, and then institutions will have a larger reason to invest in the stock. And I would be nowhere near touching shorting this stock. I would not want that. Nubank didn't drop as much today, unlike SoFi. I don't think Nubank has had the run up that SoFi has had recently. Also, Nubank put out 2 pieces of news today. Unbelievable news. We'll talk about that later. I think Noto made purchases in the 6s. Yeah, he'll make more purchases if it goes to 6. Frank, man, you can't be serious. I'll pick SoFi up again around $4 a share. $4? If it dropped to $5.50, you wouldn't buy it. You'd go, it's overpriced for me. You're out of your mind. Tanner, I'm long Fintech. Could you do an update on Toast? I'm seeing these payment processing machines everywhere I eat nowadays. Yeah. I've been looking at Toast. I've been wanting to talk about them, but they've honestly just put out no new news. And so probably the next time I will talk about them will just be earnings results. Only buy SoFi at 50 cents. Charles says under $8, it's a buy. Charles, didn't you say that you sold at $8? So anything under $8 is a buy and anything over $8 is a sell? You don't ask for much, eh? Sam, you don't hear music? Does anyone hear me? I hear music right now. I think so. As the stock went up to $10+, we haven't seen him in the chat once. It's the funny thing how people sort of come out of the woodwork, right? As the stock raises up, I see a bunch of people going, "Oh my gosh, should have bought more. What an amazing stock." It sees one bad day, okay? And people go, you know what? Sinking ship. What sinking ship? What are we talking about here? The company is going to start printing money for the first time, and people are going, jump ship. Get a lifeline. Hurry up. Yeah, the music you hear is the violin of the death of SoFi. Hurricane Lopez, how's it going, my friend? I thought I saw a message earlier. Yeah, you did. Management has earned a huge amount of respect they simply don't get from the street. SoFi will win long-term no matter what Fed Jerome Powell farts out. Yeah, no, I think execution credit is something that is extremely important. They've been talking about the levers that they are able to pull when and if they need them. That flexibility is amazing. That's also what we got from the bank charter, right? The need to not forcibly sell, but sell if we need to. They just have a bunch of flexibility. I'm not worried about it. Can you even believe this? The Titanic is a safer bet than SoFi stock, but yet you'd still buy under 4. You're just saying things to say things. Tanner, will SoFi... Oh, this is an interesting question. Will SoFi have to lower their credit quality customers in order to become a top 10 bank, increasing their risk? Can they really be a top 10 with top credit score customers? It's a really good question. I would probably say that they would have to expand their credit boxes. But that'll be like to become a top 10 financial institution is so far away. It's about a 10x from where we are, right? It's a 10x if you're just talking about US banks, I'm pretty sure as well. If that's the case, right, you will like credit quality is not something to necessarily like, lower credit individuals are simply worse. Well, that's not true, right? There's always a price to be put on the risk of an individual. So if they are 20% more risky, but have the ability to be 30% more profitable, well, then maybe there's a 50% spread there that we get to take on the idea that maybe they won't default. There was a company that I used to follow up until very recently, actually, called Go Easy. Okay. This company got in starting with investing or financing furniture, and then they just simply became like a complete lender for like the lowest of the low quality credit score people, all the way through the actual pandemic, for which people thought that this company was just going to go bust. Well, they had better underwriting than people thought, and then people were still paying these unbelievable 40+% interest rates. And so they came out looking like the kings of the town because they were making these unbelievable interest rates, yet people were not defaulting nearly as high as they thought they would. All the numbers are drastic, right? The coupon rates are much higher and the default rates are much higher, but it's the spread between the two, including the cost of their capital, which truly means, what is affordable. So, and that's talking about the complete other end of the spectrum. If you're talking about just going from a 680 credit score, 750 and bringing it down to 680 or something like this, I don't think that's drastic. There's a massive margin within there as well. What is SoFi's margin of safety? You gotta give me more on that question. Like just as a company, or what do you mean? Shane said, Tanner, I'm going to show you my buy order on Twitter. I put my money where my mouth is. Well, I love to see it, Shane. If you're going to be sending it, I'll be happy to look. And by the way, DMs are open for anyone, so anyone can message me anytime. Doesn't mean you might get a message back. I try my best, but I also work. See, why can't we get these kind of questions on the investor presentations? Yeah, right. Let's see. 14% drop on a big nothing burger is more concerning than a nothing burger itself. Retail heavy stocks are scary. Yeah, I mean, potentially, but are you looking to sell? I asked. The new glasses look great. These are the same old glasses I've had since I think starting YouTube. So and they're all bent to crap. So because I just got this dog and I'm not used to it. I actually pulled the trigger on the Celsius dip. I did my DD on it and happy to pick some up. Frank, I like to hear a comment like that. We had a big argument about that stock. Happy to see you've come to the dark side, my friend. Maybe one day I can convince you on SoFi now. What is your biggest fear for SoFi? That's a hard question. I don't know. Anthony Noto dying and then following that a recession that leads personal loans into large defaults, and then new management doesn't know how to pivot and the company dies. I don't know. That's maybe my largest fear. Hey Tanner, what price would you be buying Nubank and Adyen up to? I'm buying Nubank right now. Adyen, I probably, like I said, I don't know if you were in the last chat. I sold Adyen recently above $13 a share. Probably buy them back again if they drop below the $9 range. Like anything in the eights might be interesting for me to get back into. But yeah, not that I think that their fair value is below $9, but I'm looking for, you know, a good price to get in on. I haven't checked the short interest on SoFi recently, but actually, I'm not going to worry about that. I know it's high; it's something like 14% or something like this. So there's tons of money on the short interest of SoFi. What I do want to pivot on to before we get going is actually Nubank, by the way. So Nubank, if you guys don't know, is another very interesting company. They showed off just two things most recently. One was them wrapping up 2023 in the awards and recognitions that they have actually taken home. This is, I thought, was quite cool. It just goes to show you just how freaking large this company is. They have gotten so many rewards, and it's the one thing that Nubank does not struggle with that SoFi does is just brand awareness. This company is recognized by everyone. And some really interesting ones too. Like, I thought this one was quite cool. David is just ranking first across the board for different, CEO positions and just being, one of the best leaders ever. So across the board, very interesting. 60 different awards and recognitions in a single year. I thought was cool. Maybe one day for SoFi. Another one, and by far much, much bigger news for Nubank than just a little thing that was just a recap, was this bad boy. New Colombia, their third geography that they have entered, has received formal approval to operate a financing company in the country, meaning that they can now open savings accounts. They can now open personal loans and these sorts of things. They've already achieved over 800,000 new members on the New Colombia side of their business, which was just opened in recent years. And that's just for credit cards, which the funniest thing about credit cards is that you're not actually accepting everyone that wants a credit card because underwriting is a big part of it. So you're talking about like 5 million plus people who have applied and they go, okay, 800,000, this is great. But hey, by the way, now that we have all your email and information to these 5 million people, do you guys want our savings accounts? Because we have potentially the best offering that any single bank or fintech offers in Colombia. They just recently received it from Mexico. We probably are just going to start seeing these numbers in Q4. New Colombia, we're going to start seeing in probably Q1, Q2. So in very recent history, you're really going to start seeing increases in the number of new accounts going into geographies that aren't Brazil, right? Talk about market saturation concerns. This kind of squashes them. Thought that was quite interesting. $10. Thank you. I bought New and PayPal. Great. Danny, when are we going to have our next chat? Let's have a chat soon. Or maybe you can come on the SoFi Weekly like tomorrow or something. Is it tomorrow? No. Tomorrow's Thursday. Let's have a chat. Bullish on New Colombia. Yeah. New is a beast. That's like the greatest update that you could possibly hear. You remember how big the news whenever SoFi became a bank and then the stock absolutely ran up? Now, imagine in the last 6 months, you received a bank charter for the other two geographies. Well, not a bank charter, but new regulations to open up the companies and collect deposits and help that with cost of funding and all these things in 66% of the geographies that you operate in. The other 33% you've already had. So we went from one license to now all three. I miss you. I miss Roy. Great, man. All right, we'll talk on Friday then. You guys heard it here first. To the 330 something people, SoFi Weekly. Danny Deals just promised. He just swore on his life that he is going to be there. So now, he said, I just read it. He DM'd me. He said he's going to donate to charity. $10,000 is crazy if he doesn't show up. So very generous of him. He didn't say that, but he's going to probably be there. I'll show you my new purchase as well. It's been a busy week. Hey, you know what? The sales recently on Nubank, like, what are you guys basing it on? Please, I want to know. Crossed the 5K share mark for SoFi today. Time to work on a new position. I like the little pun there, and congratulations. Make or break earn report for SoFi this month. If overall markets decline and SoFi shows a net loss in Q4, wow, not good. Yeah, if they show a net loss, it's going to be not good. It's going to be not good. But even in that report that what's it called? Michael Perito or whatever from KBW just put out, they are expecting net income profitability and foreseeable profitability as well. Still saying $6.50. You out of your mind. I think that's crazy. He said, if I don't show up, I'll buy 10K shares of SoFi. Okay. You know what? I think everyone's fine with that. I think Nubank is expensive, needs to come down a bit. I think you'll think the same way about Celsius, my friend. Extremely fast growing. It's worth evaluation. Okay, I don't see any other real questions coming in right now. The best time to buy a great company is now. Hey, I mean, if you were looking at a chance, if you were thinking about buying the company on, Tuesday, today's or opening up for Thursday. What an amazing day. Yeah, I have such a massive position. Well, not massive, but massive for me. A massive position for SoFi that I don't really want to add right now. I want it to go lower than this. I'm not saying it will, but also if it doesn't, I don't care. I don't need to add to the position. I'm happy where it is. I want to add to other positions like PayPal or Nubank or these sorts of ones that aren't quite as full. Don't overpay for a good company or a bad company. I agree, but I don't think that you can use the same metrics for both. And I think a lot of people do. Anyway, ladies and gentlemen, thank you all so much. This has been another long episode. So yeah, it's fun. And I think that this is so overblown and that the report is not really based on good analysis, in my opinion. I think that they're kind of cherry picking on what they think is good or bad in this stock. And I think that SoFi's execution is going to lead more favorably, as I believe that they do make good decisions on where to go. And they've been extremely successful in doing so. They continue to beat and raise guidance over and over. I wouldn't imagine that with all the tailwinds behind them, that just because KBW says one thing, that we all have to, change our minds on this stock. You guys are lost if you think that. I'm going to believe in management. I think that the more members we get on the platform, the easier it is to cross-sell. The more that we're vertically integrated, the lower cost of capital or lower costs for operating are, and that also goes to lower cost of capital as well. But Yeah. Time has made SoFi better, not weaker. I wouldn't keep pricing them as if they're getting weaker. Peace. Thanks, guys.